Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingrai, practicing chartered accountant based in Mumbai. Also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to video series What Law Says, part 8. And today we are going to discuss case laws reported to High Court under GST law. So let's dive into it. Let me allow to share my screen. What law says? Indirect tax, GST part 8, and today's first case. Pradeep Kumar Siddha versus Union of India 2025, Bombay High Court, date of order 18th December 2024. Relevant section is section 69 of CGST Act 2017. Let's understand facts and issue of the case. The petitioner Pradeep Kumar Siddha was arrested under section 69 of the Act, accused of what? Availing and passing on fake input tax credit through bogus firms. Very important issue. Let focus on it. He filed a writ petition challenging the validity of his arrest and detention, contending that the grounds of arrest were not properly communicated in writing. Arrest was made without complying with procedural safeguards under the GST law and constitution. The arrest was arbitrary as adjudication of liability had not yet been completed. So issues were whether the arrest of the petitioner under section 69 of the Act was valid or not, and whether failure to provide written grounds of arrest vitiates the arrest. Let's see what Bombay High Court observed and held. The court referred to Supreme Court rulings Pankaj Bansal versus Union of India and Prabir Pukastha versus State of NCT of Delhi, holding that grounds of arrest must be furnished in writing. What Supreme Court held was that grounds of arrest must be furnished in writing. It noted that reasons for arrest and grounds of arrest are distinct. Reasons justify why arrest power is invoked. Grounds are the specific basis communicated to the individual. Failure to provide written grounds violates Article 22, sub Article 1 of the Constitution and statutory safeguards under Section 69, subsection 2 of the Act, read with Section 132 of the CGST Act. So the court also observed that arrest powers under GST are exceptional and should not be exercised routinely without necessity of custodial interrogation. The Bombay High Court quashed the arrest and detention of the petitioner, held that non-communication of written grounds of arrest makes the arrest illegal. Custodial investigation is not mandatory in economic offenses unless justified by specific facts. Direct the immediate release of the petitioner and emphasize strict compliance with procedural safeguards in future arrest under GST law. Very interesting. Next, Athiyan Exports versus State Tax Officer Tirunelvelli 2025 Madras High Court, date of order 18th June 2025. Relevant section is section 129 of the CGST Act 2017. Let's understand facts and issue of the case. Petitioner exporter of what? Coir products to China. Goods were moved for export without generating e-invoice or e-way bill. Transport was based on what? Commercial invoice. One consignment was intercepted. Proceedings initiated under Section 129 of the CGST Act. To secure release, the petitioner paid penalty of rupees approximately 2 crore 71,000 through DRC 03. Department treated that payment as voluntary and denied further relief or export incentive. So issues were whether levy of full penalty under Section 129 was justified for procedural lapse without intent to evade tax, and whether export benefit could be denied for technical or venal breach. Let's see what Madras High Court observed and held. The lapse was technical, not intended to evade tax. What Madras High Court first observed is lapse was technical, not intended to evade tax. Section 129 allows a reduction of penalty where owner comes forward. Relied on Hindustan Steel Limited versus State of Orissa 1969, penalty should not be imposed for minor bona fide mistakes. Denying export benefit for such procedural error defeats the purpose of export promotion. Read aloud, penalty reduced to 25,000, balance to be to be adjusted against the future tax liability. Court held that technical lapses cannot nullify export incentives, means they should be allowable. Next, Kunal Aluminium Company versus State of Himachal Pradesh 2025. Himachal Pradesh High Court, date of order 26th June 2025, and relevant sections are 129 and 130 of the CGST Act 2017. Let's understand facts and issue of the case. Petitioner was transporting aluminium scrap via vehicle, okay, HSN 760220001. The vehicle was intercepted for what? Non-production for valid e-way bill. At the port, IGST and customs duties on goods had already been paid. Okay, at the port, IGST and customs duties on goods had already been paid. The authorities imposed tax demand plus penalty under section 129 and 130 of the CGST Act. To secure release, petitioner furnished a bank guarantee for the disputed amount. Post-detention, petitioner generated the e-way bill and produced supporting documents. Issues were whether penalty under section 129 or 130 is substantiable in absence of intent to evade tax, that is again main 3, and whether purely procedural lapse, that is a non-generation of e-way bill, justifies whether imposition of penalties where when other tax formalities are complied with, and whether unjustifiable penal demand should be quashed, especially when tax is already discharged. Let's see what Himachal Pradesh High Court observed and held. Absence of main sri or intends to evade tax makes imposition of penalty arbitrary and unsustainable. That is the first observation, that the absence of main sri or intent to evade tax, if if it is not there, then imposition of penalty will be arbitrary and unsustainable. The statute distinguishes between the technical or venal lapses and deliberate evasion, penalizing only when evasion intent is established. Rejection of post-detention e-way bill alone is not sufficient proof for tax evasion, since tax IGST plus duty was already paid at the port. Taxing authorities had no base for additional demand. Punitive action should not nullify legitimate compliance. The High Court criticized the mechanical approach by authorities and held that penalty orders must show clear evidence of wrongdoing. This is what the department should focus on. Their mechanical approach should be come down. The penalty and tax demand under section 129 or 130 were requested. The bank guarantee furnished was ordered to be released along with interest. Stay tuned till the end of the video, because at the end of the video we will discuss one-liner conclusions that can be drawn from today's cases. Galaxy International versus Union of India 2025, Mumbai High Court, date of order 24th June 2025. Relevant section is 79 subsection 1 clause C of CGST Act 2017. Let's understand facts and issue of the case. Notice dated 9 July 2024 was issued under section 79 subsection 1 clause C of the Act to the petitioners bank, directing recovery of tax dues of person in default. The petitioner contended that no notice was served on it, that is the person from whom recovery was sought, denying opportunity to rebut the liability. This notice was served on bank and not the petitioner. So that was the Petitioner stand. The recovery notice was addressed only to the bank, not to the petitioner itself. Very, very interesting. So issues were whether the recovery action under section 79 subsection 1 clause C is valid if notice is given to the person from whom recovery is sought, that is the petitioner, or whether principles of natural justice or statutory mandate require that the person in default must be given an opportunity to contest before recovery from the bank. Let's see what Mumbai High Court observed and held. Section 79 subsection 1 clause C mandates that notice must be served on the person liable for recovery so they can prove that no amount is due. The section itself mandates that the notice must be served on the person liable for recovery. Recovery notice served only on the bank without serving the petitioner violated the statutory requirement and principle of fair hearing. The department cannot skip issuing the notice to the defaulting taxpayer and directly proceed against the garnishee, that is bank. So the High Court quashed the impugned recovery notice. Of course, it should be issued to the bank under Section 79, subsection 1, clause C. The recovery action is invalid in absence of notice to the person from whom recovery is sought. Next, Addwrap Packaging Private Limited versus Union of India 2025, Gujarat High Court, date of order 13th June 2025. Let's understand facts and issue of the case. Petitioner is engaged in manufacture and export of conductors or OPGW, etc. The petitioner had obtained advance authorization licenses and imported raw materials duty-free under a scheme. On export, the petitioner paid IGST and claimed refund under Rule 96 of the CGST rules. Authorities denied refund invoking Rule 96 sub Rule 10, alleging that because petitioner or its suppliers had availed what duty-free benefits under advance authorization, refund under IGST should be denied. Show cause notices or orders in original were issued demanding the recovery of the refunds earlier granted. So issues were whether Rule 96 sub Rule 10, which bars refund of IGST to exporters using duty-free inputs, is valid or consistent with Section 16 of IGST Act and Section 54 of CGST Act, whether omission of Rule 96 sub Rule 10 by notification number 20/2024 dated 8 October 2024 applies to pending proceedings or refund claims not finally adjudicated, and if the rule is omitted, whether all show cause notices or orders under it should be quashed. Let's see what Gujarat High Court observed and held. The court treated omission of Rule 96 sub Rule 10 as equivalent to repeal without a saving clause. Hence, all the proceedings under it, if not finally disposed, fall away. The general clauses at 1897 and especially Section 6 supports that the repeal or omission of a law without saving extinguishes pending actions under it. The notification omitting Rule 96 sub Rule 10 is prospective. That is effective from 8 October 2024, but its effect extends to all pending refund proceedings or orders not finally adjudicated. Because the rule no longer exists, there is no locus or basis to insist on show cause notices or recovery under it for ongoing matters. Since the rule was removed without any saving provision, the basis for rejecting refunds or demanding recovering collapses. The court declined to adjudicate the constitutional validity of Rule 96 sub Rule 10, as that question becomes academic once the rule is all obliterated. All show cause notices and orders in original issued under Rule 96 sub Rule 10 in pending matters not finally decided are quashed or set aside. Petitioner are entitled to maintain refund claims of IGST on exports under Rule 96, other sub-rules, without being restricted by the now omitted Rule 96 sub-rule 10. Because the foundational rule is deleted, no further proceedings under it can continue in this pending cases. Next. Arena Superstructures Private Limited versus Union of India 2025 Allahabad High Court, date of order 21st April 2025. Relevant section is 74, subsection 9 of the CGST Act 2017. Let's understand facts and issue of the case. The petitioner entered into corporate insolvency resolution process on 10th October 2020. A notice was issued to the respondent tax authorities about commencement of CIRP, that is the Corporate Insolvency Resolution Process, and invitation of claims. On 19th July 2022, the resolution plan was approved by NCLT. On 4th February 2025, tax authorities issued an order confirming a demand of for financial year 17-18 under section 74 subsection 9 of the CGST or IGST Act. Petitioner challenged this demand via writ petition, arguing that after plan approval, no fresh claims can be made. So issues were whether after NCLT approves a resolution plan, whether tax authorities or any creditor can raise new demands or assessment orders for periods prior to plan approval, whether such fresh claims would interfere with finality and binding nature of the approved resolution process. Let's see what Allahabad High Court observed and held. Once a resolution plan is approved by NCLT, all other claims, including by revenue, stand bad because opening fresh claims undermines the insolvency resolution process. So this is the first observation, is that once the resolution plan is approved by NCLT, no other claims stand, means all other claims stand bad because opening fresh claims undermines the insolvency resolution process. The court relied on Supreme Court precedents for under the Vaibhav Goyal and NS Papers Limited, holding that post-approval claims disrupt the phrase start principle. The revenue cannot saddle the resolution applicant with new liabilities after plan approval. The High Court twice the impugn assessment order and demand notice issued on 4th February 2025 under section 74 subsection 9. It held that no fresh claims can be raised once the resolution plan is approved, as that would invalidate the finality of the IRP process. Next, Shyama Power India Limited versus State of Himachal Pradesh 2025. Date of orders 11th July 2025. Relevant sections are 65 and 74 of the CGST Act 2017. Let's understand facts and issue of the case. Petitioner Shyama Power India Limited doing construction of what transmission lines, substations in Himachal Pradesh. Audit proceedings initiated under section 65 of the Himachal Pradesh GST and CGST Acts for 1718 and 1819. Audit memo alleged wrongful availment of input tax credit of approximately 1.11 crores from three suppliers. Discrepancy notice under Rule 101 Sub-Rule 4 directed reversal of ITC plus interest and penalty under Section 74. Under protest, without admitting liability, petitioner reversed the ITC by depositing amount on 31st March 2023. What petitioner did under protest, without admitting liability, reversed the ITC by depositing amount on 31st March 2023. Final order dated 2nd December 2023 imposed interest of nearly 1.32 crore and penalty of nearly 1.11 crore, treating the protest deposit as admission of liability. Petitioner was prevented from challenging the main tax demand in appeal because the portal only allowed dispute of interest and penalty, that is basic demand shown nil. So issues whether interest and penalty could be imposed under Section 74 without independently determining the tax demand, whether a deposit made under protest can be treated as admission of the liability to justify penal consequences, very important issue, whether the departmental order was bad by procedural defect or lack of impartial inquiry. Let's see what Himachal Pradesh High Court observed and held. The petitioner's reversal of ITC under protest doesn't amount to an admission of liability. The right to dispute is preserved. Okay, that's clearly stated. The revenue treatment of the protest deposit as admission was legally untenable and perverse. The order imposing interest and penalty was issued without determining the underlying tax demand. That is, no clear assessment of taxable liability. There was no adequate independent or impartial inquiry. Reliance on audit memo or suspicion alone is insufficient under the statute. What it said, there was no adequate independent or impartial inquiry. Reliance on only audit memo or suspicion alone is insufficient under the statute. Very clearly it says the petitioner should be given chance to raise all grounds in fresh DRC 07, enabling the appeal. The writ petition was allowed. The impugn order under section 74 interest plus penalty was quashed and set aside. Directed the respondents to issue a fresh DRC 07 reflecting only the disputed tax amount of 1.11 CR so that the petitioner can file the appeal. And now we will moving to conclusions that can be drawn from the cases discussed today. So let's see conclusions one by one. Arrest without furnishing written grounds is unconstitutional under GST law. You can take the screenshot if you want. Okay. Arrest without furnishing written grounds is unconstitutional. Minor procedural lapses like failure to generate e-invoice do not justify heavy penalties. Proportionately in enforcement is essential. Absence of an e-way bill doesn't imply tax evasion. If tax is already paid, procedural lapses alone shouldn't lead to penalties. Recovery notices must be served to the taxpayer directly, not to the third party or the garnishee, allowing them opportunity to contest the liability. Exporters can claim IGST refunds even if they avail advance authorization, promotes easy of doing business. Once a resolution plan is approved by NCLT, GST authorities cannot raise fresh claims, protecting insolvency process sanctionity. Payments made under protest are not admission of liability. Authorities must independently investigate before levying penalties. So that's it for today. Please note down my contact numbers. If you have any questions, queries, observations, suggestions, then please do let me know. Okay, these are the contact numbers, and you can also comment below the video if you can. Okay, so be connected. If you are not yet subscribed to Tax Guru YouTube channel, then do subscribe it for latest updates and videos like this. So stay tuned, connect, and happy learning and happy Diwali to all of you. Okay, thank you so much for patient hearing. Care, take care, and Hare Krishna.